So it's the 2023 company account, the second option, East Elm. Um, if you've tried to do the Vincent Leahy one, um, this question is incredibly similar. The workings are very similar. Everything's very similar about it. So they're worth doing in tandem. If you can practice one, you can practice the other. So as always, I'll have my layout of my skeleton drawn out, and I'll be onto my workings straight off and straight into them. Um, so they're quite similar to what we did uh, in the V Leahy one. So if we start off with the first one, so stock at cost was 31st of 12th was 95,000. So we know we're going to start off with our stock of 95.2. We're going to take away the 7.2 and then add on the 25%. Uh, so 25, it's worth 25% for it. So that's what's that, 1800 probably. Let me just work that out. Um, yeah, 1800. So I'm going to add on 1800. The other way you can do it is work out what 75% is and take it away. You get the same thing. Okay, so that's the first one done. Second one is my patents working. Again, be careful with this. Patents which incorporate 5 months investment income are written off over a 6 year period which commenced in 2021. So I always work out my investment income first. Alright, this is the way I do it. So if I go up and look at my investments, I got them on the first of the second. They're 3%. So 3% of the 124, and I'm going to multiply that by the number of months we have them for. If we got them the first of the second, you didn't have them for January, so you had them for all the other months. So that'll be 124,000 and multiply by 11 twelfths, and you're getting 34.1. So after that, you've got your investment income due. Now that'll start as 34,100. So that can't be right. 3410. So we'll start off with our 3410. That's our investment income. How much have we received? So it tells us patents which incorporate 5 months investment income. So we've received 5/11ths. So we have to take away 5/11ths of 3,410. So it's 5/11ths rather than 5/12ths. So I work that out. You're going to get 1550 to take away from that. I'm just going to put that there so I can work it out later. Okay. There may be, it's worthwhile checking because in the other one I didn't check, there might be more investment income mentioned somewhere. And if there is, you would take that away as well. There might be a small number there. There's not. Okay, there might be more later on. Now, I'm going to add that onto my patents. So, my patents is going to start off in the question as you're looking in the debit column here for anything that's patents, which I can't see. There we are, there, 53.3. And I'm going to have to add on that 1550, the amount we've received. And that'll bring us up to 54,850. So, and now that's been written off over a 6 year period which commenced in 2021. Now remember, we're doing the accounts for 2022. So you're not writing off by 6 years because this already has 1/6 written off. So we have to find 1/6 if this is 5/6. So to do that, we're going to divide that by 5. Okay, so the patent's written off. Rather than divide by 6, we're going to divide by 5. Just be careful with that. So that's 10,970, and that's going to get taken away from our patents number there. And that's 43,880. Okay, so Alright, so that's our second working done. Third one, no record has been made in goods in transit. The invoice for these has been received for 19,860, including VAT at 23%. Right, so the first thing is creditors are owed an extra 19,680. So you always include the VAT and everything, the full amount when you're paying creditors, because that's how much we're going to pay them. So we're going to get some of it back, but we have to pay over the full amount. So we add on the full amount, which is 19,680. All right. However, we have to split that 19,680 into its purchases and VAT elements. Okay, so the purchases is going to be the 19,680. We're going to divide it by 123 and multiply by 100 to get the VAT exclusive amount. Okay, so divide by 123, multiply by 100. That gives you 16,000. All right, so we have to add 16,000 onto purchases. Okay, so again, that's only a working sort of a figure. So the purchases figure starts off at 758. We're going to add on 16,000. Okay, now VAT is a debit. So we are going to debit the difference. So the 3,680, we're going to debit that to VAT, whatever we have to do. So VAT starts off as a debit. So we have a debit of 23, and we're going to debit a further 3,680. So we're going to add those together. Okay, so that'll be 5,980. So when they're on the same side, you add them together. When they're both debits, if one's a debit and one's a credit, you take away and you keep it on whatever side is bigger. Okay, so again, you can check the VLEHE video for that. Now, the 16,000, we've bought that. We owe the total, so the 3,680 and the 16,000, we owe the total, the 19,680, so that's why creditors gets increased. We own the 16,000 stock, but it's not in our warehouse, so we have to put it in our warehouse. So we add that 16,000 onto our stock. Okay, and that's that working done. Right, now this next one isn't in VLEHE. It says goods with a retail selling price of 12,000 were returned to a supplier. This was correctly entered in the books. The retail selling price is cost plus 25%. So the cost price has to be worked out. Even if you don't know what to do here, work out the cost price. Easy enough. Take your 12,000, which is cost plus 25%. So divide by 125 and multiply by 100, and that'll give you the cost price. So divide by 125, multiply by 100. So it's 96. Now we're not doing anything with this, right? 10% of that is the restocking charge. Okay, so it tells us that there's a restocking charge of 10% of cost price, so we can work that out. 10% of 96 is 960. So what do you do with a restocking charge? It doesn't go in. But instead of being let off 9,600, we're being let off 8,840. So our credit note is too big. So our creditors have gone down by too much, and our purchases have gone down by too much. So we have to add back on the restocking charge to get it back up to what it should be. So we've brought our creditors down by 9,600. They should only have gone down by 8,940. Sorry, 8,540. So to correct it, we add back on the restocking charge. So 960 gets added to creditors. So it's only ever the restocking charge that gets added back on. It also gets added back on to purchases. So our purchases went down by too much as well. So we have to bring them back up by the correct amount. All right, so I hope that one's okay. Normal depreciation working. So delivery vans, first of all. So we've got delivery vans, which start off, the cost amount is 175. Now, as always, you'll trade in a delivery van. So on the 30th or 4th van, which cost 36, was traded in against a new van costing 45. So we don't have the van that cost 36. We do have the one that costs 45. So that's an increase of 9,000. so 184. All right, so our delivery vans go up to 184,000. Now our depreciation works around those two numbers. So it's a straightforward standard depreciation. So the depreciation of vans is, the rate is 15%. So we have 15% of 175,000. For the amount of time we only had 175,000, which was for the first 4 months of the year, because the transaction took place on the 30th of the 4th. So for the first 4 months of the year we had the original figure. For the remaining 8 months of the year we had 184,000. Okay, so we can work out those sums. Okay, so that's 27 150 for our depreciation. Now, anytime we have depreciation, we've accumulated depreciation. Alright, so our accumulated depreciation is whatever we started off with. I'm sure I'm on the right one. So accumulated depreciation is the difference between 175,135, so that's 40,000. Add on the 27,150, and then you have to take away the depreciation on the van you sold. So if you don't have the van, you don't have its depreciation. So we 15% of the van we sold was 36,000. Now, how long do we have it for? Just compare when you bought it to when you sold it. So you got it on the 30th to 6th, 19. So you have it for 6 months in 19, all of 20 and 21, and then you have it for 4 months. So you have 6 plus 12 plus 12 plus 4 is 34 months. So if we work out 15% of 36,000 and multiply it by 34 twelfths, you get 15,300, and that's the depreciation on the one we sold. Okay, so the accumulated depreciation on delivery vans will then be 40,000 plus 27,150 minus 15,3, which is 58,850. Now, in every single question we do when we sell a fixed asset, we have to work out the profit or loss on the sale of the fixed asset. So to do that, we compare the value, which is the cost minus the depreciation. So in this case, 36,000 is what it cost. 15,3 is its depreciation, which gives you a value of 20,700. You compare that to the allowance you received, or the amount you've received. So in this question here, it tells us we received an allowance of 18,000. So we got 18,000 for something that was worth 20,700. So that's 2,700 of a loss. Okay, so you got less than what it was worth. So therefore you have a loss on the sale. And that'll be selling and distribution expense. Now the check for the net amount is included in purchases. So the check for the net amount is the new van minus the allowance. So if the new van cost us 45,000, we got an allowance of 18,000. Well, that's 27,000 of a check we had to write. So we have to take 27,000 out of purchases, and that's that working finished. Okay. Right, the suspense one then. So again, I have my own way of doing this, so just be aware of that. So the suspense arises as a result for the incorrect figure for debenture interest. So we're going to work out the correct figure. So debenture interest, you can see we got 6%, and there's an increase on the 1st of the 6th. So I'm going to do the full amount of the debenture working. So we had 220,000 for the first 5 months of the year. And we had, now this might not be relevant just yet, but I'm going to do them. We then had 280,000 for the remaining 7 months of the year. Okay, so in total, our debenture interest is 15.3. Now that's going to change in a little bit. The debenture interest due then is 15.3 minus whatever we've paid. So it tells us we have paid, and we know this figure is wrong. So we'll go up and check what's paid. I don't see interest paid here anywhere. Interest received, where is it? VAT, dividends paid. Debenture interest for the first 4 months is 6.4. Now we know that that's wrong, so we have to work out how much it is, right? So the amount paid is 6% of 220, because that's how much we had, by 412. So this is what the number should have been. You could also just find 4/5 of 5.5 and you get 4.4. It's the same answer. So that's the amount we've actually paid. So I'm going to take that away, and that's my debenture interest due. Okay, so this 4.4 is the correct number. This 6.4 is wrong. So this 6.4 is 2,000 too high. Okay, so if we bring this back down to 4,400, this goes to 1573,100, and the right hand side remains correct at 2,575,100. So we have to get this back from 2,573,100 to 2,575. So we have to add 2,000 to whatever incorporates suspense. So in this case, it's the salaries. So they have to go up by 2,000, and now both sides will be correct again. Okay, so we add 2,000 to that. So we've brought the 6,400 down by 2,000, which means we have to bring the salaries up by 2,000 to make it to continue to balance, because it's on the same side. Okay, so that's the first part. The second part, it says there's a payment of 4.5 entered on the incorrect side of the PAYE account. The correct amount was entered on the right side. The correct entry was made in the bank account. So if you make a payment of 4.5 for PAYE, it's credit the bank, so money out of your bank. So it's credit the bank, debit PAYE. So if you think PAYE, PRSI here is 48.2. Okay, we're supposed to debit that by the payment of 4.5, but they've actually credited it. So to get it back to as if they've done nothing, automatically you have to take away 4.5, and that brings you as if they've done nothing. And then to do what they should have done, you have to debit another 4,500. So when something's on the wrong side, it's always double the number. So it's 9,000 gets taken away from PAYE and PRSI. Okay, so they have increased the amount that's owed instead of decreased the amount that's owed. So they've increased what's owed by 4.5. To get it back right, decrease it as if nothing has happened, and then decrease it again because you've made a payment. So minus 9,000. So now what have we done? We have debited the credit side by 9,000. So this side has gone down by 9,000. We can see it here. We just check the answer. 48 to minus 9,000. So that brings it to 39.2. So this has gone down by 18,000. So the credit side is now 18,000 less than the debit. So to make the debit side equal, we're going to have to take 18,000 away from our salaries. All right. So I hope that's okay with everybody. Sorry, not 18,000, 9,000. Where am I getting 18,000 from? Apologies. So that's the suspense one. So 9,000 taken away from PAYE, 9,000 taken away from salaries. Okay, working 7 then. So very similar to the Leahy one that's in a separate video. It says the company revalued the land and buildings to 1.1 million on the 1st of the 1st. So they did it at the start of the year, and the revaluation has not been reflected in the accounts. So we have to revalue them. So land and buildings at the start of the year, just make a note that it's the 1st of the 1st, are going up to 1.1 million. They were 950. So to get up to 1.1 million, we're going to have to add on 150,000. Okay, when you revalue, accumulated depreciation goes to 0. So we've got to go 120 minus 120. both of those, the 150 and the 120, become your revaluation reserve. You don't include this year's depreciation because you revalued before you depreciated. So that's 270. Okay, now this year's depreciation is worked off the new land and buildings figure. So the depreciation of buildings, if we check, the land is 300,000, where land and buildings is 180, so we've got buildings of 800,000. So we've 2% of 800,000, which is 16,000. Now your accumulated depreciation will be 0 at the start of the year, plus this year's depreciation of 16,000, which is 16,000. So I hope that one makes sense. So when you revalue at the start of the year, you revalue without this year's depreciation, and then you work out your depreciation on your new buildings figure. Okay. Your bank rec, again, nice and easy. Our bank figure is the one at the question. So it says the figure for the bank and the trial balance is from the firm's own record. So we're saying that there is minus 33.4 in the bank. Okay, the bank are saying, so a statement has arrived showing an overdraft of 31.2. So they think we've minus 31.2. Neither are correct. We have to get the correct figure. So how do we do that? Anything the bank have done but we haven't, we change our figure. Anything that we have done that the bank haven't, we change their figure. And when we've done everything, they'll be right. So first one, a credit transfer of 900 has been paid directly to the bank's account. So we don't know about it, but the bank do. So it's in the second one, but it's not in the first. Credit transfer is money we receive, so we have to add that on. Okay, the second one, a cheque issued for 1,300 has not been presented for payment. We know about it. We wrote the cheque. Not being presented for payment, hasn't gone into the bank. It reduces the amount in the bank, so we have to change that. So if we take that 33.4 or minus 33.4, add the 900, you get minus 32.5. If you do the same here, minus 31.2 and minus 1,300, you get 32.5. Now, anything that we've changed in ours will also have a double entry element. Anything that hasn't happened in the bank, we don't have to worry about. So this first one we also have to do the double entry with. The second one we don't. So the credit transfer of 900 has been paid on behalf of a bankrupt debtor who's recently been declared bankrupt. This represents the first and final payment of 30 cents in euro. So debtors have to go down by the full amount. So we have received 900 euros for a full debt, which is 3,000 euros. We'll see why that is in a second. So debtors start off, I don't think I've changed debtors, have I? No. Debtors start off as, or are they 92.3? And we have received 900 euros. Now the 900 euros is represents 30 cent in the euro. So every euro we owed, we get 30 cent. So if we divide by 30, multiply by 100, that 900 represents 3,000 euros. Now, you can't just do that without having a bad debt written off. So the bad debt written off is the difference between the 3,000 and 900. So we're writing off a debt of 2,100. If it's the other way and you're recovering money, debtors will go up and there'll be a bad debt recovered. If you want to check the sole trader question from 2023, that's the working in that. All right, so that's that one done. It says provision to be made for investment income and debenture interest due. I've done both of those. Equipment to be depreciated 10% per annum on a reducing balance basis. If you do depreciation questions, you'll know what reducing balance is. Basically, it's not the cost, it's the value. So it's the depreciation of the value rather than the depreciation of the cost. So depreciation of equipment is 10% of, if we go up and look at equipment, it started at 65, it's worth 32, so it's 10% of 32, which is 3,200. And the accumulated depreciation will be the 32 minus 65. So the 33,000 is your starting figure plus the 32. So it's 36,2. Okay. So that's that one done. Sorry, a bit of a cold coming on. Provision for bad debts to be adjusted to 6% of debtors, always delayed to the last debtors figure. So BDP, 6% of debtors. So debtors is 89.3, which is 5358. Now, anytime you have bad debt provision, you have an increase in, or decrease in bad debt provision. So the change in bad debt provision, it's gone from, if we could find the bad debt, it's gone from 6.2 to 5.398. So there's a decrease in bad debt provision. So 6.2 down to 5.358. Is a decrease of 842, and that's going to be another operating income. So that one should be okay. So I think that's pretty much all of them. So if I look here, provision should be made for corporation tax, 35,000. Corporation tax goes in, or skeleton, we'll see it, and corporation tax is also a current liability. All right, so we just got to get everything in. So if we want to see where everything goes, trading, investment income goes in its normal spot. Investment income due as a current asset. Patents, intangible fixed asset. That should be patents written off, which is going to be an admin. Creditors goes in current liabilities. Purchases is in the trading. It's that one there really I'm interested in. VAT is, because it's a debit, is a current asset. If that's a credit, it's current liability. So VAT can either be owed to us by the tax office. In that case, it'll be on the debit side. So you can see here VAT is on the debit side to start off, and then there's a further debit. VAT can be on the credit, which means we owe VAT and it's current liability. The cost and the restocking charge, I was using them to work out something else, so they don't go in. Delivery vans is a fixed asset, tangible fixed asset. And the depreciation of delivery vans is selling and distribution. The accumulated depreciation will go in your tangible fixed assets. The loss, anything to do with the van, is selling and distribution. If it was a profit, it would be other operating income. Debenture interest goes in its own spot. Debenture interest due is a current liability. Don't mind the things that are paid, you never do anything with. Okay, just be aware of that. Salaries. Salaries is admin. PAYE will be a current liability. Land and buildings is tangible fixed asset. The accumulated depreciation will also go in tangible fixed assets. Revaluation reserve in the finance by. Depreciation of buildings will be admin. The bank will be a current liability. The bad debt written off will be a selling and distribution. Debtor is a current asset. Depreciation of equipment is a admin, and the accumulate will go in tangible fixed assets. Bad debt provision gets taken away from debtors. A decrease in BDP is another operating income. And then I've got to remember my corporation tax, which is a liability. Goes in two places. So it's 35,000, which will go in the P&L, and also on the current liabilities. Okay. From the main part of the question then, anything we're missing: opening stock is cost of sales, discount net, it's credit, so other operating income. If it was a debit, it would be selling. Director's fees, admin. Advertising is selling. Salaries have changed. Rent received, other operating income. Don't do anything with the debenture interest paid. Capital reserve goes in the reserves in effect, so added to it goes in your finance buy or your the end of your trading profit and loss account, wherever you want to put it. And the preference shares go in the share capital go in the finance buy. So we're just getting numbers in. So I'll start at the top and work my way down. I'll go through this reasonably quickly. We've done all the working, so I've got the answer in front of you here. So what sales 1.15, opening stock from the question 55.4, purchases from the workings 747,960, and the closing stock also from the workings 105,800. So just show you those at the top. I probably don't have them done. So the expense of obviously opening stock plus purchases minus closing stock gives you the 452,440. Now inter expenses, your admin, we've got from the question we've got directors fees, which were 23.3. We've got no others, but I know we've got like depreciation of equipment, salaries and general expenses. Let's go find these. We've got depreciation of buildings, which now 16,000. And we've got patents written off. So our patents written off is 10,970. Our salaries is our suspense one, so 2254. And our depreciation of equipment is 27,150. I won't total them for a minute because there might be a few more I've missed out on. We've got depreciation on that's not 27,150. That's depreciation on vehicles or vans. That was the 27,150. Depreciation on equipment was down at the end, wasn't it? So it was 3.2. We know we've got the loss in the sale of van, which was 2.7. Then I definitely have advertising, don't I? So advertising is 6.7. That's from the question. I'm just trying to think if there's any more. Is there a bad debt written off? There was. There was a bad debt written off from the bank working. So the bank working bad debt written off was 2.1. I think that's them all. So just going to total those up now. And then total them again. And I'll obviously take them away from my gross profit. And from those, I'm going to have to add on my other operating incomes. Sorry. So I know I've got the discount from the question. So the discount from the question is, I'll be on the credit side here somewhere. 5.1. I've got my rent received. That's from the question as well, 18,000. Then I've my decrease in BDP, which is for my workings. So 842. So I need to add those three, onto my previous answer, and that gives you my operating profit. Now, to that, I have to add on my investment income. So I've worked out that my investment income is 3410. And from that, I'm taking away my debenture interest, and that's a working again. So my debenture interest was 15.3. So that's a minus. Now, I have to be very careful and remember to take off my tax. So you can't really miss it if you've the skeleton drawn out, but there's very few questions with tax in it, so you may not have practiced too much. So just be aware to take off your tax. So net profit before tax, 146,972. Net profit after tax, am I gone wrong there? I have I? 111,972. No, I haven't. My dividends. Now, there's dividends in the question. There's no dividends due. I've paid 45,000. Okay, so from that, take that away, and I get my retained profit. Of 66,972. Now I'm going to add on my profit and loss balance from the first to the first, assuming that it's a credit. So my profit and loss balance from the first to the first is can't see it. Might be a debit. Yeah, debit. Profit and loss balance first to the first is a debit, so we have to take that away. So minus 59,000. So if it's debit, you take it away. If it's credit, you add it on. And that gives you 7,972. And from that, you can do your capital reserve now, or your 39,000 capital reserve that already exists. If it doesn't tell you to transfer it, it's best practice to leave that out and put that in your answer over in the finance by the capital reserve. So we'll see that now in a second. Okay, so we go over to our balance sheet. Standard balance sheet, pretty straightforward. So we've got our patents. So they're from our working. So I think they're 40 something. Where are they? 43,880. All right, you've got your standard assets then. So we've our land and buildings, which we revalued to 1.1 million. But we know there's depreciation in them of 16,000. So we're going to take that 16,000 away. And we've 1,084. Then we know we've our vans. With our big working there, they were 184,000. Now I just took a note when we were doing it. So our vans are 51,850. So we take them away. You get 132,150, and then we've our equipment. So our equipment was 65,000. Our accumulated depreciation is down at the bottom here. 36,2. So we're going to take that away. Okay, so we're going to add all those together. Okay, now we're going to have to add that tangible fixed asset onto your intangible, and you get 1,288,4 or 830, and then add on your investments. So there's 3% investments. The full amount 124, and then your total fixed assets will be the two together. Don't worry about putting in an extra column. They just do that in the marking scheme, and it just sometimes makes it easier to follow because of your bad debt provisions to deal with. I wouldn't worry about it. Right, so our current assets, we've got our closing stock, which is 105,800. Now then we've our debtors minus BDP. So the debtors in the question is, we changed it to 89.3 and the bad debt provision free 5358. So you take away the bad debt provision, and you get 94,658. That's the amount. That can't be right. That's the amount we get 83,942. That's the amount we expect to collect. Okay, so the other current assets that I can remember are VAT. I know that's definitely a current asset because we spoke about that being a debit. Oh, sorry. Where's that gone? Sorry, I just want to. Nope, no use to me. I'll just complete it here. So the VAT is a 1860, which is a debit, and there will always be investment income due, and the investment income due will come from our workings. I think the investment income due was, so it was 3410 minus 1550 is 1860. Alright, so if we add those together, you get 193. That's wrong. 1058. What have I left out? 1860. Investment VAT is VAT is 5980. Sorry. Let me just check that. Where's the VAT? Sorry, I just got a bit knocked off when I was doing the when I deleted the page. Anyway, 197582. All right, so our current liabilities, with creditors. So again, we will have changed creditors in the question, so it'll come from the marking scheme, it'll come from the workings page. So 85,840. Everything in the first column here. Then our bank figure again from our workings page. We've our two bank figures, 32,500. We've our debenture interest due from our workings page, 10,9. We've our PAYE, again that's from our workings page as well. So I changed that when I did my suspense working, 39.2. Then my corporation tax, so don't forget that. And that is 35,000. This is it here, is it? So I'll be able to get it up now. Okay. Right. So otherwise I won't be able to see what goes into finance by. So I think that's them all. I'm hoping this is right now. So 203,440. Take that away, and you get a negative working capital of 5858. So obviously take that away from your tangible fixed assets because it's negative. You get 1406,972. Now our debentures, 6% debentures, so call them 6% debentures. And you'll get 280. Now you have to put in your ordinary and your preference shares, and you have to put in your authorised and issued. So the authorised come from the top. So we have 500 preference shares, and 900,000 ordinary. Don't do anything with these other than they add up to 1.4 million. You don't have to, they're just for show. Then your two at the bottom, say 730 and 80, are the amount you've actually issued. So that's 810. Then you have to add in your reserve. So if your revaluation reserve, which we worked out in our, or we saw in our workings, to be 270. You also then have your capital reserve of 39. So you're not creating this, so it's not a transfer or anything. So 39,000. And then you also have your profit and loss, which in effect is another reserve, which is 7972. So your answer obviously from over here, 7972. So if we add up our capital and then add on your debenture, should have an extra zero, I would have thought. If we've done it right, hopefully it'll balance. And it has, which is a miracle considered. All right, so that should be hopefully that's of help to you. It should be okay. I suppose the ones to be aware of: the working three, the goods in transit. Have a look at the suspense one maybe, and for those who aren't used with the equipment on the reducing balance basis. But that's that question. If there's any questions, feel free to ask.